How much of it is new narrative? How much of it is just kind of a cherry on top if we stretch the timeline back? Basically, it seems like for a proper big tech conversation, we got to go back to basically COVID, it seems like, kind of the fertile soil that began a lot of this latest thematic movement. Take me through that, Dan, because it feels like if we rewind the clock a little bit, we get some answers as to when this started. Just when we were dumping money and cutting rates, basically, right?
Well, no, I mean, like, and look, me and you talked, throughout many of the years, and I think it was the start of essentially a new foundation. When you think about what happened in tech, then you could say some of them, like Zoom and some of the sort of COVID names that obviously started to come down, once lockdowns and everything came out. But from a shift to the cloud, hyperscale, foundational, I mean, that's really the start of what I view as almost a 10-year cycle. And I think we're only kind of 3-4 years into it.
Dan Ives highlights the growth and resilience of the tech industry, emphasizing how regulatory easing during the Trump era and diversification of supply chains across Asia have bolstered innovation and demand. He views the COVID-19 era as a foundation for a decade-long growth cycle, particularly in areas like cloud computing and AI. However, he notes growing geopolitical tensions, particularly between the US and China, with regulatory scrutiny on companies like Nvidia as China seeks to catch up in AI technology. While these challenges pose risks for firms with significant exposure to Chinese markets, Ives remains optimistic about the sector's adaptability and strong global demand, which continue to drive innovation and investment.
But I do think those markets, it's enabled us to maybe get an edge when it comes to supply chain and just broader some of the demand that's going on within tech. When you think about what's happening across Asia, across Vietnam, Malaysia, and others. But look, I think under Trump, I mean, this is a Cinderella story for big tech. Regulation essentially gets defanged, more deal making, Musk with a big C at the table. It's very, very bullish for big tech.
Do you see it, Dan, I guess, having a significant impact just on the roadmap there in China, what that future strategy looks like? And you talk about the fact that this is a really a geopolitical headline. I guess then my follow-up would be, how big of a risk maybe does this, or how big of a risk signal is this to some of the other larger chip players who do still have exposure to China?
Every company is right now looking at the calculus of their business in China. We see companies like Qualcomm, Intel, AMD, all have double-digit percentage market share in China. And of course, they want to continue to sell into China. We also know that President-elect Donald Trump is planning to put some pretty strict tariffs into place. Now, of course, I always put a balance there because President-elect Trump does not want to harm the markets in any ways. I think a lot of his campaign was on creating a strong stock market economy. And of course, these firms like Nvidia are such a big weight on the indexes. He doesn't want to see them get harmed, but at the same time, we don't want to continue to feed China with the best and most advanced technology. And that comes from many of our companies, not just Nvidia. That comes from our cloud, computing leaders like Microsoft and Google. That, of course, comes from our OEMs, the Dells and of course, the, Lenovo's and other companies here that are really large selling systems, HPEs. And so they really have to think about how they manage that relationship. But I think as a whole, every company has to worry because China is such a large consumer of products and of course technology leadership from the US.
In any tit for tat kind of scenario that we see play out, it's typically the companies that have the largest revenue exposure to China that we see have a bit of a pullback here as investors start to recalculate what the interim period at least holds. Based on what we've seen before, and then what we've also seen before in exemptions, what type of exemptions are you anticipating, and what even quantifiable pullback could be on the table if we were to see this play out in a broader kind of tit for tat that impacts some of the largest US companies that have the most revenue exposure to China?
Yeah, I mean, we've already seen a little bit of this play out in the real world. We've seen Micron get significant challenge from China. That impacted revenue substantially. And before that sort of big high bandwidth memory pivot that happened over the last year with AI, it really harmed Micron. And then of course, we recently heard some probes into Intel and the business that's going on with Intel. And of course, we know Intel has been in a delicate position. So Nvidia is a little bit of a different play. And there's been this ongoing sort of moving target of creating these scaled back AI chips that could work in the China market. But recently we heard, anything below 7 nanometer, they were going to cut off through these new export controls. That's basically every chip that's been designed recently for that market. And so you're talking a multi-billion-dollar impact, double-digit % revenue for Nvidia, not as high as some companies. Others like Qualcomm have even higher exposure, but we expect this to continue to play out. There just is no circumstance until, over the next few years that China and the US aren't going to continue to strain, because AI is not just about this technology, it's really about global economic and defense leadership. And the US doesn't want to weaken its position.
Dan, when you take a look at the reaction that we're seeing in pre-market here today, you've got shares off just about 2%. That move to the downside, is that a bit of an overreaction, or is it something that maybe does make sense given some of those longer term concerns?
I expect a series of ongoing probes that will take place. I think this will hit the news cycles every quarter or two, with a different part of the world probing Nvidia. I think some investors may get a little bit spooked when these things happen. China, of course, is such a large market, but we also have to let this play out, because like I said, the growth of Nvidia, they can barely fulfill all the demand outside of China right now. The growth is so incredible, but this is also a company that's run up to around a $3.5 trillion market cap. So there's also going to be breathing periods. And I think investors may look for moments and signals to maybe sell, take some profit, and then possibly re-enter if there's a meaningful pullback. But I think it's just the beginning for Nvidia and this entire AI trend, which I heard your guest before talking about the exact same.
What are these reversals signaling to you? Dan, I'll start off with you because you raised some of these issues during our call.
Yeah, I did. And I'll just say this as our chief salad correspondent here. I think it's the kava and the sweet gene. Yeah, no. I think it's the kava and the sweet gene, which were really interesting to me today. They're both up more than 200%, as you said, and they were reversed like 13% off of a high, closing down that much. If you have big gainers like this and you're getting to this point of the year after the sort of gains that we had across the board, and you're willing to actually take profits and pay taxes this year, it says something about some of the gains. It says something about where investors, at least in the growth trade, are starting to focus in next year. The one that really stuck out to me, forget the tech stuff, it was Apollo. We started the day, it was announced that they and Workday are going into the S&P 500. You'll see this rush by indexers. They go and they buy these stocks. It gapped up, and then the fact that it reversed and closed down in the day from an all-time high. This is a stock that's up 85%. The idea that, listen, this is a great company. You know what I mean? This is like the Goldman Sachs of private equity, that sort of thing. Everybody wants to be them. But the fact that it reversed, closed on the low like that, it is saying something to me about investor appetite.
Yeah, look, Palantir is the one, and it's a time of season. That acronym, I did it right that
soon.
time. Right?
Yes, it will be coming in January.
If you recall, a few years ago, mine was the Hope trade, and P was Palantir in the Hope trade, and it didn't work out particularly well, but now it's starting to flex its muscles a little bit. But with today, at one point, at its all-time high, this was a company that was trading about $175 billion of market cap on top of about $3.5 billion of revenue for next year. I can do the math. It's about 50 times revenue. It's obscene, the valuations that it's trading at. But the reversal today on more than 2 times normal volume cannot be ignored. It's reminiscent of what we saw with Nvidia in March and again in June. And I think this potentially can sift its way into the broader market, Melms.
Back to Apollo, that was also on heavy volume. Mm-hmm. And so technically, is that
that's the key to it. And it's the precondition before an intraday reversal, which is extreme strength that seems almost unbelievable. And then at some point, it's no one can know what day, what particular hour, you get what is known as a reversal, which is an intraday event that actually not only undermines the previous strength, but calls into question all of the preceding days and weeks.
Nvidia sinking in pre-market after Chinese officials announced an antitrust probe into the U.S. chipmaker. Joining us now, let's bring in Dan Newman, who is the Futurum Group CEO. Dan, you see a headline like this come across, gotta wonder what goes through your mind, especially as this goes directly at the poster child of the AI trade.
First of all, nobody should be surprised to hear about an ongoing set of probes against Nvidia, especially coming from China. Now, there's sort of 2 sides to this one. There's the first, which is the more ongoing microaggressions that exist between Chinese and US firms. And of course, as China continues to struggle to keep up with the most leading edge advanced AI chips, they probably want to do what they can to slow US firms down. On the other side, China's talking about a 4-year-old commitment that came from Nvidia to make sure that Mellanox, which is the networking technology that they've bought that's really enabled Nvidia to continue to create differentiation in these systems that they're building, and saying, hey, is NVIDIA helping enough with Chinese-made chips and using this networking technology to advance what China is doing? And of course, that's a challenge too, because China is so far behind right now due to a combination of controls, a lack of the materials and technologies to build the most modern AI chips. So I think what we have here is really more of a macro geopolitical strain than a real probe. But NVIDIA is so successful that they're going to get probed by every regulator in the world over the next few years.
Dan Ives discusses the tech industry's growth, driven by shifts during COVID-19 and regulatory advantages under the Trump administration. He highlights the rise of cloud computing and AI, while addressing challenges like US-China tensions and increased scrutiny of companies like Nvidia. Despite risks, strong global demand and innovation continue to propel the sector forward. He emphasizes the need for resilience through diversified supply chains and adaptability in navigating geopolitical challenges. While short-term volatility is expected, the long-term outlook for tech growth remains positive. How will US-China tensions impact the strategies of leading tech companies? Can diversified supply chains effectively mitigate geopolitical risks in the tech industry?